This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, March 4th, 2015. Euro dollar. So the euro remains under pressure after recently breaking down below range support at 12.65, with the focus now firmly on a retest of the 10.98 recent 11-year low from the 26th of January. A break and daily close below 10.98 will open the door for the next downside extension towards the 106 area and confirm a lower top at 115.35. However, inability to close below 10.98 will keep the pressure potentially on the top side, with the market very oversold on a weekly basis and risk for more consolidation or correction ahead of a bearish continuation. Sterling dollar. So cable looks like it could now be carving a lower top in the 55.50 area ahead of what should be a fresh downside extension back towards the recent 2015 low at 49.51. A break below the 53.15 area would confirm and accelerate declines, while only back above 155.55 would compromise the bearish outlook. Dollar yen. So dollar yen remains locked within a very tight consolidation over the past several days, although this consolidation is confined to a broader consolidation between the 7-year high at 121.85 from December and 115.55 below. Ultimately, given the intense uptrend, this market is favored to continue to the upside through 121.85 and towards 125 further up, with setbacks expected to be very well supported by this previous triangle resistance in the 117 area. Euro Swiss. So Euro Swiss has done a good job of consolidating over the past several sessions after the market rallied out to the 108.15 area. But the market could be exposed to additional setbacks over the coming sessions, although any setback should be very well supported ahead of 104.15 in favor of continued recovery up above 108.15 and towards next key psychological barriers at 110 further up. Aussie dollar. So Aussie clearly is locked within a very well-defined downtrend, but has been confined to a consolidation trade over the past several sessions. The market recently stalled out above 79, and it could be looking to carve out the next lower top ahead of a downside extension back below the recent multi-year low at 76.25. Really, at this point, more clarity is going to be given on either a close back above 79.13 or a break below 76.25. Dollar CAD. So dollar CAD continues to consolidate its recent gains, with the market posting fresh record highs in 2015, 5-year highs in 2015 at 128. The market will now be focused on breaking and continuing this uptrend above 128 and towards the next key objective in the form of the 2009 peak at 30.65. Until then, any setback should continue to be very well supported ahead of 123.50, with only a break below to delay. Kiwi dollar. So Kiwi has been consolidating after recently stalling out above 76, which acts as some formidable previous support, and the market could be in the process of maintaining this current downtrend and putting in a lower top ahead of a downside extension, a fresh downside extension back below recent lows at 71.76 and into the 60s further down. For now, the key levels to watch above and below come in at 76.13 above or 76.14 above, and recent lows that we saw at 74.20 below. A break on either end of those ranges will give clearer insight with Kiwi. SPX 500. So a little bit of excitement here with the S&P 500 after the market had been unwilling to roll over in previous sessions, trading up to fresh record highs at 2120. But now we're seeing the formation of a potential top, with the market triggering a double top formation on Tuesday below the neckline at 2102 now, and this opens the next downside extension, or measured move downside extension, towards key support in the 2080 area. If the market can close below 2080, this will open the door for a more significant downside acceleration and signal that a more material top is trying to carve out in the SPX 500. Back above 2120, of course, will negate and expose fresh record highs towards 2150. Gold. So gold has seen some nice setbacks since January, but these setbacks have been very well supported, and overall the market continues to show signs of basing off the 2014 1130 low. At this point, a higher low is now sought out in the 1190 area by last week's low, with fresh upside seen above 1308 and towards 1345 further up. For now, only back below 1190 would give reason for pause and potentially put the pressure back on the downside.